Ladies and gentlemen, good day and welcome to Suraj Estate Developers Limited Q2 and H1 FY25 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Thomas, Whole-Time Director. Thank you, and over to you, sir.
Good morning. I welcome everyone to our Q2 and H1 FY25 earnings conference call. Along with me, we have our CFO, Mr. Shrikal Shah, Mr. Ashish Samala, Internal IR, and SGA, our Investor Relation Advisors. I hope all of you have gone through our investor presentation uploaded on the exchange and our company website. India's residential real estate sector has demonstrated robust growth in the recent years, and we anticipate that positive market dynamics will persist in the coming years. The substantial business development we've accomplished under favorable terms position us to expand our bookings and margins, paving the way for strong earnings growth in the years ahead. The MMR region continues to dominate the residential real estate landscape, accounting for a significant 38% market share among India's top 7 cities. Affordable and mid-end segments continue to be the most sought-after segments by developers and builders, contributing to 35% and 29% of the city's new launches respectively. Within the MMR, the distribution of available inventory across the 3 sub-regions, Mumbai, Navi Mumbai, and Thane, remained relatively steady compared to the previous quarter. Mumbai continued to lead with a 75% share, followed by Navi Mumbai at 14 and Thane at 11. Within Mumbai, the peripheral central suburbs emerged as a dominant zone for available inventory, accounting for 30% of the Mumbai's available units. Nearly 32% of Mumbai's available inventory fell within the affordable segment. Compared to the previous quarter, the inventory overhang in the MMR remained steady at 14 months by the end of Q3 2024. We are extremely pleased with our operational performance this quarter, particularly given that it traditionally represents a seasonally slower period. Despite this, we achieved a commendable 14% growth in sales volume alongside a 10% improvement in realizations, showcasing the resilience and the growing demand for our offerings. The year-over-year decline in finance costs is another positive development, largely attributable to the utilization of IPO proceeds for debt repayment, which enabled us to reduce debt significantly. On a quarterly basis, the decreased interest expense is further supported by the absence of a redemption premium during this period and in the subsequent quarters henceforth. These favorable financial conditions have contributed to strengthening our bottom line and overall financial stability. We raised 343 crores via preferential allotment of equity shares, amounting to 243 and an additional 100 crores via issue of convertible share warrants. In October 24, we received a total of 269 crores, which includes fund raised through preferential allotment and subscription money of approximately 25 crores in October 24. The balance amount is expected within 18 months from the date of allotments of warrants. These funds will be utilized for land acquisitions, working capital, general corporate purposes, and issue-related expenses. A group of high net worth individuals, asset management funds, and family offices participated in the successful fundraising round. We are delighted by the robust investor support for this substantial capital raise. This timely infusion will provide the growth capital needed to expand our operations and diversify our product portfolio. We plan to strategically deploy these funds to reinforce our position in the residential and the commercial real estate sectors, seize new opportunities, and deliver lasting value to our stakeholders. Looking ahead, we aim for pre-sales of 850 crores for the current financial year, with plans to launch 7 new projects totaling to a GDV of 1150 crores. Our strategic entry into the Bandra sub-market, backed by the initial phase of approvals and focused approach on redevelopment under DCR 33-7 and society redevelopment under 33-7B, position us strongly for the future growth. We are particularly optimistic about Mumbai's redevelopment potential, where over 19,000 properties are more than 50 years old, with 16,000 urgently requiring redevelopment. Our expertise in tenant settlement remain a key driver of value in these projects. In our ongoing projects, we have 5.39 lakh square feet. We have sold 5.39 lakh square feet out of a total of 6.09 lakh square feet, generating approximately 1,370 crores with a receivable of approximately 767 crores. The unsold inventory totaling to 0.71 lakh square feet has an estimated GDV of 395 crores. The combined receivables of 1,162 crores from sold and unsold portion of our current ongoing portfolio are expected to materialize between FY25 and FY29. Looking at our future pipeline, we have 18 upcoming projects with an estimated carpet area of over 9 lakh square feet for sale. Approximately 67% of this is in the value luxury projects, 14% is in the luxury, and 7% is a mix of value luxury and luxury. And the balance 12 is in commercial properties for sale. The 18 projects are projected to generate a GDV exceeding 5,000 crores. The Mumbai metropolitan region, the MMR region's residential real estate market.
Ladies and gentlemen, we have lost the management line connection. Please stay connected while we reconnect them. Thank you. Ladies and gentlemen, thank you for patiently holding. We have the management line back on the call.
Hi, we just reconnected. To continue, the MMR region's residential real estate market is poised for a robust performance for FY24. The sustained momentum witnessed in previous quarters, fueled by favorable economic conditions and a growing preference for home ownership, is expected to continue. With several infrastructure projects nearing completion and the continued focus on urban renewal, the MMR residential market is well positioned to conclude 2024 on a high note, potentially setting a new benchmark in both sales volume and value. Our optimism regarding the potential with MMR region remains steadfast. We look forward to capitalizing on its growth prospects in alignment with our vision for a robust and diversified portfolio. With this, I would like to hand over the call to our CFO, Mr. Shripal, who will run you through the financial highlights. Over to Shripal.
Thank you, Raj. A very good morning to everybody. I will now run you through the financial highlights for the quarter and half year ended September 2024. Starting with the performance for H1 FY25, the total income grew 18.3% year-on-year to rupees 244 crores versus rupees 207 crores in H1 FY24. EBITDA grew 16% year-on-year to rupees 128 crore in H1 FY25 versus rupees 111 crores in H1 FY24. PAT grew 97% to rupees 62 crores from rupees 32 crores in H1 FY24. On a quarterly basis, the total income grew 6% to rupees 110 crores in Q2 FY25 from rupees 104 crores in Q2 FY24. EBITDA grew by just a percentage to rupees 64 crores in Q2 FY25 versus rupees 63 crores in Q2 FY24. PAT grew 88% to rupees 32 crores versus rupees 17 crores. Coming to the operational performance, pre-sales grew a growth rate of 26% year-on-year in Q2FY25 and 13% in H1FY25, despite a seasonally weak quarter and the occurrence of some inauspicious period during the quarter. Realizations grew 10% year-on-year in Q2FY25 and 12% year-on-year in H1FY25 on account of price hikes and increased sales of luxury portfolio of projects. Collections grew 90% year-on-year in Q2 FY25 and 46% year-on-year in H1 FY25 on account of new project launches and higher sales volume. 40.9% of revenue came from sales of luxury units and 59% of revenue from sales of very luxury units. With this, I would like to open the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participant, you may press star and 1 to ask a question. The first question is from the line of Sagar from Nirmal Bang Institutional Equities. Please go ahead.
Yeah, thank you to the management for taking this time out. My first question is on our upcoming 18 projects which have 9 lakh square feet of development area. If I remove the 1 lakh square feet of commercial project, we have around 8 lakh square feet of residential. And out of that, almost 50%, which is 4 lakh square feet, is coming from 2 projects, which is Marinagar and Girgaon Karwadi. So if you can throw some light on these 2 projects, what are the timelines and what we can expect from these?
Hi, thanks, August. So in terms of, like you correctly said that most of the upcoming projects, carpet area is coming from these 2 projects. In terms of Marinagar, we've already got the first phase of approvals where we have IOD in 2 of the projects, already live IOD in 2 upcoming buildings there. There would be slight minor amendments in the plan in terms of adding 5 more buildings in the redevelopment phase. We've already done the necessary paperwork as part of our announcements that the 5 buildings in the same project also will be added. So there will be an added potential coming up from what we've already discussed. And design is underway as we speak. And we are targeting mostly a big launch by next year.
And the Girgaon Karwadi project?
Girgaon Karwadi will not come in by next year, it will come in the following year.
Sure, thanks. And one more question is, our average realization, I see in the presentation on the ongoing projects is shown as some 39,000 per square feet. And our estimated average realization on the unsold inventory, we have taken at around 55,500 per square feet. So if you can just throw some light on what are the last deals that are happening and how confident are we of achieving this number of 55,000? Yeah.
Sure. So if you see average realization quarter on quarter, Q4 average realization was about 53,650. Q1 was 51,116 to be precise, and this quarter was about 48,366. So we're seeing the average realization has gone up in the last 3 quarters. So we've taken a base of the same of the last 3 quarters.
All right. And my last question is, largely our upcoming projects are in the Mahim side and not many on the Prabhadevi Worli side. And we are seeing a lot of traction in the market in the Prabhadevi Worli side. So is it that we have consciously tried to be away from the Prabhadevi Worli side because land cost is high? and more towards the Mahim side? What is your strategy? If you can share your thoughts on that.
Actually, these lands are already been acquired, and since these are already lands which have been acquired and these are larger in size, we need to give returns to the shareholders. So we are planning to launch the larger developments first, and they happen to be in Mahim, and we are seeing good traction even in Mahim in terms of we have a couple of projects in the Mahim belt as of now, and we're seeing good realizations coming from them. So I think we're very confident in that market as well.
All right. Thanks. I'll come back in the queue. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Rohit from RM Securities Limited. Please go ahead.
Thank you for providing me the opportunity. I have one question. Which segment do we see traction in the industry? Are we seeing oversupply, or is it easy for us to sell? Hello?
So, yes, Rohit, we could hear you. So the traction we are seeing right now, which has always been steady, has been the value luxury concept, where it is between 1 and 3 crores. So that is a constant segment which there's been a steady growth, and in terms of not only realization but also in velocity. Even the larger ticket is doing well, but of course we see that prices won't go higher than this. This is our estimate that we see that the prices will be kind of steady at the current market price, and we're seeing again a big demand for commercial. So just to give you an industry overview, we see commercial which has a good potential. The luxury segments will be obviously doing well. People have a demand for it, but we see the prices not going up from now onwards. And of course, what is really doing well is the value luxury concept.
Okay, that answers my question. Thank you so much for it.
Thanks.
Thank you. The next question is from the line of Krishna Shah from Ashika Stock Broking. Please go ahead.
Yeah, so I have a question on the cost of construction. So quickly wanted to understand what are the margins that we are expecting? Are we expecting any increase in the cost of construction going forward?
In terms of construction cost, we are seeing that the labor prices have been going up steadily, so which obviously will impact our construction cost. But we don't see a very substantial hike in the construction cost. It's normally steady, but of course there is a labor shortfall. We see overall in the entire construction industry, and I think that may impact the construction cost, but very marginally.
Okay, got it. Secondly, on the approval side, are we getting any delay on the front of approvals from RERA or any other government body, which is impacting the project launches that are planned in the second half of FY25?
Normally RERA approvals take some time. The number of compliances from RERA standpoint also has increased in the recent circular. So normally it does take time to get a RERA approval compared to earlier. But I think compliances have just gone up, so I think that's why the timeline has been extended.
Okay, got it. And my third question is on the revenue target for FY25. So what is the revenue number that we are expecting to close this year, and at what margin, like the EBITDA margin?
I can't give you an exact estimate on the future revenue, but I can just tell you that our target of pre-sales would be 850, and we're quite confident on achieving those numbers. The pro rata, of course, depending on the project and the revenue recognition method, it will definitely be higher than last year, but I can't give you an exact estimate right now.
Okay, sure. And one last question, if I may ask, what is the target spend on business development that we've planned for FY25, and how much of it has been done in the first half of FY25?
we have raised some money under preferential. So I think the end use was for business development. So that will be kind of expended before March.
Okay. Got it. Thank you so much.
Thank you.
Thank you. The next question is from the line of Rohit Mehra from SK Securities Limited. Please go ahead.
Yeah, good morning, sir, and thank you for the opportunity. My question is related to the same fundraise. Where do you plan to use the funds we recently raised, and how much GDV would it translate to?
So mainly the objects of the fundraise is also for business development. So a good portion of that would be roughly around 40% would be for new BD and land acquisition. So that will be expended before March. And I can't give you the exact dynamics of the plot because it's a bit too early, but definitely we'll inform the exchange and everyone on the GTV once we acquire that land.
Okay, got it, sir. Thank you. And also, can you highlight the breakup of finance cost?
So, hello, Shripal here.
Yeah, hi, sir.
Yeah. So, what breakup you require?
So, overall finance cost, what it comprise of?
So, majorly it's from ongoing portfolio of projects. So, 19 crore is there, which is there. We can take that question offline.
Sure, sir. No problem. I will join the queue for next. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Sagar from Nirmal Bang Institutional Equities. Please go ahead.
Yeah, thanks again for the opportunity. So on the Suraj Vibe, our commercial project, if you can throw some light, how has been the response and what we plan to build there, some details if you can share, whatever.
Yeah, sir. So like on Tulsi Pipe Road, which is, we have approximately 1 lakh of square feet. The RERA is underway, which is also part of our launch pipeline for this year. So we are seeing good interest coming up from clients who are looking for commercial space, and I think we're quite confident on closing some deals over there.
Sure. And lastly, on the Bandra project, anything that you can share with us right now?
So things are moving positively in the Bandra planning. I think we've already, like we informed earlier, we already have the first phase of approvals. We're looking at the larger piece, so design and a lot of technical details are getting worked out as we speak. So we're preparing for the next year launch.
In which quarter we plan to launch the phase 1 Bandra project?
We still, it again depends on certain approvals, but I think between Q2 and Q3 is something which we are targeting.
All right. Thanks a lot and best wishes. Thank you.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Arjun Mittal from Mittal Securities. Please go ahead.
Yeah. Hi, sir. Good morning.
Good morning.
I have a couple of questions. My first question is, what gives us the confidence of achieving our guidance, considering we did not launch any new project this quarter?
So thanks. So basically, we have already got approvals in our commercial project, which I think Mr. Sagar from Nirmal asked the same question. We have the approvals, IOD and the CC for that particular project. It's just that the RERA approvals are pending, which is taking some time. So as soon as that RERA approval comes in, we're seeing a GDV of approximately 450 crores of launch only in that one project. So since these all approval projects which we already got all the approvals, it's just RERA is pending. We're quite confident that these launches will come across very soon.
And my second question is that what would be the GDV we would expect from these new launched products?
Like we said earlier, 1,150 crores is worth of projects will be launched before March.
Okay.
Arjun, I hope this answers your question.
Yeah, sure.
Thank you. Participant, you may press star and one to ask a question. The next follow-up question is from the line of Rohit Mehra from SK Securities Limited. Please go ahead.
Thank you, sir. So, just one question. As our debt has gone up despite raising funds, can you give some clarity for the same? And also, can you help us with what is the cost of debt now?
So, to answer your question, we have the cost of debt remains the same level, 13% weighted average cost of capital. And regarding the dates, I did not get regarding the fund raise, your question.
So my question is, as we have raised the funds, but at the same time, our dates are gone up.
Fundraise has happened in after September. The debt position which we are talking of is in September. The increasing debt is on account of the upcoming launches where we have spent approval related costs. So for two of our projects, one at Tulsi Pad Road and a residential project known as Parkview 1.
Okay, got it, sir. Got it. That's it from my side. Thank you.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. A reminder to all the participants, you may press star and one to ask a question. As there are no further questions from the participant, I now hand the conference over to the management for closing comments.
I take this opportunity to thank everyone for joining on the call. I hope we have been able to address all your queries. For any further information, kindly get in touch with us or SGA, our strategic growth advisor, our investor relation advisors. Thank you very much.
Thank you. On behalf of Suraj Estate Developers Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.